Hello friends, and welcome back to Murda's IAS Quick Learnings. This is Tom Regis. Today I want to just take a couple minutes talking about the global banking scare. On March 10th, America's 16th largest bank failed, and within a week, two others collapsed. And we saw share prices of banks in Europe and Japan plunge also. And Credit Suisse, a 166-year-old bank in Switzerland, had to be bought out by UBS, another Swiss bank. So what happened? Silicon Valley Bank, based in San Francisco, California, saw $42 billion flee in one day. When interest rates were low and asset prices were high, SVB, or Silicon Valley Bank, had purchased a significant amount of long-term bonds. Now, typically, this is a safe investment as SVB had purchased high-quality bonds. But externally, as the nation's rate of inflation started climbing, the federal government sought to fight inflation and as a result, raised its interest rate at its sharpest pace in 4 decades. When this happened, long-term bonds began dropping significantly in market value, and banks were left with huge losses. Now, America's capital rules do not require most banks to recognize bonds available for sale at mark-to-market rates, only the very large banks. But when banks must actually sell these bonds, the unrecognized losses become real. Banks, by nature, survive on trust. The depositors must trust that their money is safe in the hands of the bank. When that trust starts to decrease, it can cause a run on the banks, which means depositors begin withdrawing their deposits. So it becomes this vicious trap. In order for SVB to give the depositors back their money, they had to sell their long-term bonds. But now that the value of the bonds had decreased, they were taking a loss on every sale. And just like that, SVB collapsed. In order to decrease the risk of runs on other banks, the U.S. government came to the aid of SVB and ensured every depositor that they would be made whole. We'll now have to wait and just see if the government's intervention has actually calmed the depositors' fears, or is there a bigger run on banks waiting to happen? In the meantime, the central government is in a tight spot. Now they have to bring down inflation and restore price stability in the economy. But what's been happening is that this monetary tightening is increasingly catching banks and other financial institutions off guard. So will combating one issue make another situation worse off? We can only wait and see. So keep listening and coming back as we keep giving you updates through quick learnings of Murda's IAS.